On today's hot sheet, I'm discussing weekly housing inventory for the year that was and the latest house price indices from S&P CoreLogic and FHFA. Today is Thursday, January 2nd, 2025. I am Byron Lazine, and the hot sheet starts now. Good morning. Welcome into the first hot sheet of 2025. Glad to be back after the short little break here to wrap up the end of the year. Hope you and your family had a happy, healthy new year, great holiday season, and all of that. But now it's time to get back into it. It's time to get into a year that many of us here in the industry are looking forward to, a year to maybe, hopefully, finally pull us out of the real estate recession. There's optimism, whether you like the presidential pick or not, there's optimism behind it for the economy. You could see that with the initial boost in the stock market. Now, we know, like most December's end of the year, we've seen that stock market recede, but the overall optimism remains. It remains fluid in consumer confidence moving up. It remains fluid in a lot of the ways investors and the markets are looking forward in 2025. But it leaves housing in a particular position. Is housing actually going to get that momentum? There's critics, obviously, that believe it won't. And there is some optimism that believes it will start to open up, thaw out. If you remember, for the last 2.5 years, we've been talking about a locked up market, a frozen market. I called it Cold War before it received other names. The Cold War between homeowners who have 2.5%, 3.5%, 4% even 30-year fixed interest rates, who would like to sell, but just aren't going to do it because they don't want to trade into a 7+% 30-year fixed rate environment. Are we going to get any relief on that 30-year? A lot of the analysts say that, hey, it's only going to be, 6.25%, maybe low sixes by the end of the year. So not a lot of optimism that relief is coming from the 30-year, but are we just going to finally see some of that pent-up demand that would-be sellers come off the sidelines and get into selling season? It all remains to be seen, but what we do know starting this year, more so than the last couple of years, is we're starting in a healthier place as it relates to inventory. And the more inventory we get, the more we can start to believe in this market, the more we can start to see opportunities for more buyers, and then the more momentum we can finally see for more to enter the market and start getting back to a transaction level that's closer to normal, to a fluidity in the market that feels more natural than some of these unnatural markets we've experienced since 2020, and certainly since the money printing machine made real estate unattainable for many. So as we do on most Mondays, and we'll do it on Monday when we return after the weekend, as we do, though, at the beginning of each week, this is the end of the week this week, let's take a look at inventory, but let's take a look in reverse. Let's take a look at the year that was in 2024. And Housing Wire says that this rising inventory here is maybe the most positive housing market story in 2024. We're now starting to actually approach 2019 levels. If you remember, 2019 wasn't going to be like the greatest inventory year of all time, but it was a lot more normal and natural than anything we've experienced since March 2020, right? If you really think about actually 2020, if you think about the beginning of 2020, January and February before March changed everything in many lives, and as well as the real estate market as we know it over the last 4 or 5 years. If you think about the beginning of 2020, it's like, wow, this is going to be an intense market. It's going to be competitive. There's going to be buyers fighting over properties. It's going to start to feel like a real seller's market. Okay. All the signs in 2019 were leading up to that. And now we're actually getting closer to where we were in 2019 levels. We're starting the year with 27% more inventory than last year. This is great news. So this is where we're starting the year here at 650,992. Now, we started the year in 2019 at 817,000, but think about where we started last year, 513,000. We've cut it almost in half, 27% more than last year on single family inventory active on the market. Okay, 27% more than 2024 is a huge win. It feels like we're heading somewhere positive. It's not all of the story. It's not the best thing, right? But it's something. It's momentum. It's like over the last couple of weeks, if you went to, a holiday party, maybe your spouse dragged you to a holiday party, and she's like, maybe your wife says, "Hey, I've got great news about the holiday party this year." Okay. So and so who just annoys the living hell out of you, and all they want to do all night is show you every single photograph they've taken in their iPhone all of 2000. And then this happened in March, and then this happened in July. They insist on showing you every photo they've taken for the entire year. You're like stuck in the corner on a corner seat in the living room with somebody hovering over you, showing you every single photograph they've taken all year. And you're like, how do I escape? How do I escape? The shrimp cocktail is full over there. Oh my God. The island at the kitchen is full. I can't escape. I'm stuck in this conversation. But your wife says to you, good news. I got great news about the holiday party. You're thinking, is the holiday party canceled? That would be great news. I don't have to go to this party. So-and-so is not going to be there. Oh, that's a relief. I still have to go to the party. Don't want to actually be there. Still dreading the party aspect of it. But so-and-so who shows me every single photo in their phone that they ever took in 2024, they're not going to be here. That's a win. I'll take the win and move forward. That's what this housing market inventory situation is. We're not back at 2019. We're approaching 2019. Okay. We're not back to normal inventory levels. We're approaching it. We don't get to miss the party we're dreading. We still have to go. We still have work to do. There's still some conversations we don't want to get stuck in, but we're not getting stuck in 2024, 2023 type conversations. We're not getting stuck in 513,000 on inventory to start 24 or 23 when we started with 490,000. Or dare we even think back to 21 where we started at 419,000, or 22 where it was grossly non-existent on inventory, 293,000. No, we're starting at 650,000. We're still attending the party. We're still like, okay, got to go have some uncomfortable conversations. But the win is I'm not having the dreadful one. Okay, so 650,000. How high can it get is the question. Last year, we peaked out at 739,000. Okay, peak for 2024, 730, almost 740. I mean, I've got to suggest with where we're starting here that it's safe to say we're going to crack 800,000. Okay, think about 2019. 2019's high level was 976,000. We crack 800 something thousand this year on active inventory in the market. That's a good position. I think we'll take that. Okay, we got to 740 last year. Could we crack 850? Could we get close to 9? Huge wins if we do. There's signs that suggest we will. Let's see what happens, okay, as we move through the year. Again, last year starting at 513,000 for the same week. So good position here as we kick off 2025. I see Jay in the comments saying we're oversaturated here. Love to know where here is for Jay. And when we're saying oversaturated, if now inventory in some markets, remember, inventory is flipped to a buyer's market. Where I'm sitting right now, Southwest Florida, it is flipped to a buyer's market. There's more inventory levels than 2000. There's higher inventory than pre-pandemic. Think areas in Texas, higher levels of inventory, like Austin. We've got All About Living in Austin here with Steph saying that's what's going on in Austin. Yeah, absolutely. Parts of Texas, part of the Gulf Coast, parts of, certainly the western part of Florida, Southwest in particular, south of Tampa, Riverview area, most of buyers market. They've got so many homes, many cookie cutter Lennar homes trying to sell. So these are the areas when you think, south of Tampa, you think Austin, Texas, you think San Antonio, where the national home builders came in and built a ton of inventory. You think about a market I'm very fluid in. Think about Connecticut. You think about the Northeast. Connecticut's still 70+% less on inventory than pre-pandemic levels. So when you have a hot market, it's not that great to have a lot of buyers because, and the market's obviously still hot with low levels of inventory because there's not anybody building in the Northeast. Connecticut, Massachusetts, New Jersey, New York, the Northeast really fighting that opposite effect of inventory. 40%, okay, here's a number for you. 40% of this inventory gain that we saw in 2024, 27% more than last year, total active inventory. Well, 40% of that gain in inventory was driven by two states, Texas and Florida. So Texas and Florida are going to feel very different than most of the country. It's going to feel like a buyer's market in many of those areas. Okay, there's advantages to being in a buyer's market. It's a great time to accumulate a lot of listings, make a name for an agent in like, hey, I'm going to have market share. If I've got the budget to do it, to hold it, go with that Ryan Serhant mentality of never getting fired. He says there's only one job for a listing agent, never get fired, right? Whether it takes 3 years to sell or 3 days, if you never get fired, you're collecting another one. Okay. So there's an opportunity in buyer's market to collect listings. I know agents hate it when people say collect listings, but it is a strategy. It's a strategy that when the market starts to actually pick back up, like, well, who's the person that lists all the homes? So-and-so lists all the homes. Let's go have a conversation with her. She's got every single listing in the neighborhood. Well, 2 years ago, they would have said, hey, those homes aren't selling. Now they're saying there's an advantage to listing with somebody who's selling all those homes. So there's an opportunity there. New listing data for over the past few years here, as we look at that last week of 2024, we beat it 32,000 over 24,000 over 19,000 in 2022. So more people listing their home the end of the year last week of 2024 than we saw in the last week of 22 and 23. Another one of those like, hey, we're not skipping the dreadful holiday party. We still got to go, but that bad conversation that we dread every year isn't there. Another sign like that where it's like, this is good, not great. Okay. This is good, not great. We're getting somewhere with this market. We've got some momentum. Okay. Percent of properties to end the year with price reductions on that last week, 36.4, a little bit more than 23, 35%, but less than 22 at 38%. That also tells me something about this market. People on the market are serious sellers. They're on the market here, the end of 24, rolling into now 25. They're like, I want to sell. I'm a serious seller. I'm going to actually show you with my reduction. Okay. And you probably see that a little bit in places like we were talking about, those Florida, Texas markets, okay, where you can get and negotiate a deal in some of those markets. Can't do that in other parts of the country. Weekly pending contracts last week over the past several years, last week of the year, 269 on pending contracts, 269K versus 258 and 251. So 4% more single family homes in contract end of the year than last year. Another just like, okay, we'll take the little wins as we get them. Mortgage purchase application to end the year. We finally, since September, October timeframe, started seeing year over year versus 23 gains on mortgage applications. 23, we got it. Really lowest level of mortgage applications since 1995. All of that kind of stuff. So we're coming off of bottom numbers, but we're starting now week over week over week, even with the interest rates being up over 7%. To see that improvement. Okay. We're not starting the year off in a great spot as it relates to the 10-year treasury. Got it. Okay. We're like at the peak point of where we were in 24. We started last year less than 4% and they kind of rode that wave, right? Remember there was that optimism of 5% 30-year fixed in, December of 2023, which we dispelled here pretty much from J1 of 24 on the hot sheet. We said, don't say that to your clients. Delete those videos if you ever posted them, right? And we saw that number just shoot up on the 10-year going all the way into April where it popped off at 4.7. We're starting the year here at, up over 4.5, 4.62. I'll give you an exact, that chart's maybe a few days old there, but I can give you exact where we're at here today. 4.531 is where we're starting. And I've got the 1 year up here. So you can see we're basically starting, over 4.5. I mean, we didn't hit up over 4.5 much last year. We did it April, May, a little bit in June, right? We want to get back to these August, September numbers for sure. 375 would be a sweet spot for us as we look at that relationship between the 10-year and the 30-year. Not starting the year there, so hopefully room for improvement there on the 10-year. All right, there's your look at inventory over the past year. What were the bright spots? 27% more to start the year. And the hope is we can build quickly in January, get some more of these new listings and new inventory on the market. That lock-in effect, we want to de-thaw that. Okay. Welcome, Justin, late to the party here. Good morning. Happy New Year. Welcome in to the first hot sheet of 2025. Obviously, to get the most out of what we do here at BAM as it relates to our YouTube content, just go down and hit that subscribe right down below. Hit the subscribe and the notification bell. You get access to the hot sheet each and every Monday through Thursday when the markets are open, basically every Monday through Thursday that the markets are open throughout the entire year. We do this show live, 9:30 on the East, 6:30 on the West. So if this is your first hot sheet ever, definitely make sure you hit the subscribe and the notification bell down below. It's the only 24-hour look back on the housing market live on the internet, on YouTube, basically each and every single day. Bring this to you courtesy of BAM and courtesy of Zudilio, who loves the hot sheet. We've got a little Zudilio information later on here in the show. All right, let's get to the CaseShiller S&P CoreLogic CaseShiller update. Okay, this one came out on December 31st, so it came out just a couple days ago here, Tuesday, the last day of December. This is the gold standard as it relates to home pricing. Everybody wants to look at what does CaseShiller say? What does CaseShiller say? Of course, this isn't, they don't come out December 31st with all of 2024. We got to wait 2 months because it's such late data, the lagging data. It's pretty easy to be accurate when you got 2 months here to wait to release your data. But that's the case here. CoreLogic CaseShiller index is, talking about October. We're in January now. We're talking about October 2024. But that's the way it is with CaseShiller. The gold standard here of price index says that there was a 3.6% annual gain recorded in October. Okay, what does that mean? Okay, the 3.9 or a 3.6% annual gain covers all 9 divisions. They've 9 U.S. Census divisions. This is down from 3.9% the previous month. Okay, so we started to see a deceleration at the end of the year, and I expect those numbers when we see November, December to continue. A deceleration in home price appreciation doesn't mean home prices are going down. They're still going up overall. Some parts of the country, I get it, going down, all of that. But it's far and few in between. Overall, country as a whole is going up. And we saw that here again in October, 3.6 versus September's 3.9% annual gain. That's a annually adjusted number. The 10-city composite, which we'll get into here in a minute, saw an increase of 4.8, down from 5.2, so similar to the country. Moving down 4.2 versus 4.6 on the 20-city composite. New York again reported the highest annual gain among the 20 cities with a 7.3% increase in New York in October, followed by Chicago and Las Vegas at 6.2. Las Vegas continuing, as a market adjusts, Vegas usually adjusts with it. Not happening this time. Vegas is very hot. Tampa posted the smallest gain year over year with a 0.4% increase. So that inventory kind of crushing home price appreciation in a place like Tampa, crushing it relative to these gains like a New York or a Chicago or a Vegas, right? Not crush it when you're up 0.4% from historic gains. Crushes is a bad. I'm just comparing it to what's happening 7.3% versus 0.4%. It's the inventory that's bringing that price down, and it's creating opportunity. Obviously, opportunity for buyers to get in to a place like Tampa. It's got a lot going on, by the way, at an affordable rate. I know we have Jay here in the comments south of Tampa. So Tampa, smallest gain out of that 20 city composite. Let's take a look at the 20 city composite here, and we'll release these tables. Obviously, all BAMX members, you want to use this in any of your marketing, your social media, your conversations. Obviously, that'll be available to you inside of BAMX underneath hot sheet show notes. Okay, if we look at Atlanta now, October, September change down 0.26%. So almost everybody down October versus September, except for Boston had a 0.25% increase. New York had a 0.18% increase. New York, by the way, I think I said that, and Washington 0.1% increase. New York, end of the year, I was in New York City in December. Never saw the city like that. I know holiday season, New York City, it's got a feel, it's got an energy, it's got people in New York City seeing the tree, doing, family stuff, doing all of that, going to see a show, having dinners. But New York was more packed even, when I look at past Decembers, and I've gone to New York a lot of Decembers in my life, growing up in Connecticut, gone to New York quite a bit. Never seen New York as packed, as aggressively competitive on the hotels and the restaurant scene as I saw it this past December. I mean, the buzz, the energy seemed to be back for sure, but just the attraction, the amount of people who wanted to be in the city, now people coming back to office. New York, you see why, obviously, the home prices continue to, New York never fails, right? As many issues as that city has, continues to move up. Okay, the year-over-year change, again, New York having the biggest at 7.27%. Nobody on the list saw a decline, okay? Tampa was the closest to a decline. It may get that next month, or when we look at December's numbers. Tampa, though, still hanging in there at a 0.4%. Everybody's in between. The smallest after Tampa was Denver at 0.44%. Okay. So there you go on your 10 city, 20 city, and national composite from CaseShiller. Now, FHFA also, usually on the same day here, releases their data through October 2024, and they have done so as well. So we've got the FHFA House Price Index, HPI. This is the data, again, through October 2024, just like CaseShiller CoreLogic data. And so let's see what FHFA has to say. They obviously still have my favorite chart, which we'll have for you in the hot sheet show notes inside of BAMX, that shows, hey, if you're a buyer today, if you're I'm a buyer in 2025, should I buy? I mean, house prices seem very high. Yeah, they're always high, meaning they always go up and to the right. Okay. I mean, unless you're waiting for another mortgage crisis, which there's absolutely no evidence that we're anywhere close to a 2006, 2007 type of market. In fact, we have like such uncomparable levels of inventory to that time. We have such uncomparable levels of foreclosure starts and all of that. We'll get into more of that as we get into January here. But the facts remain the same. Home prices go up and to the right almost every single year, and you can trace that back to January to January 1991, which is where that chart starts. So a lot of history there of home prices just continuing to move up. Now they've got FHFA's got a couple of different regions here that we'll take a look at. U.S. Price change. They've got 4.5% on the home price through October 2024. That's versus a 6.5% when you look at October 22 through October 23. So we're comparing two different years here on this bar graph. The Pacific region saw a 2.3% increase sent through October 2024 versus 3.3 the prior, 3.9 in the mountain region versus 3.2 the year prior. So mountain first region there outperforming 22 through 23 Octobers. Okay. West North Central 4.6 versus 6.7 the year prior. So underperformed on home price. 2.4 in West South Central versus 3.7, underperform. East North Central 6.7 versus 9, another underperform. East South Central 5.6 versus 6, underperform. New England 5.9%, and they were up over 10 the year before, so underperform, but 5.9 is a big number. Middle Atlantic 7% versus 9.9, big number for Middle Atlantic, but an underperform. South Atlantic 3.7 versus 7.3. So just the mountain overperforms there when you look from October 22 to October 23 versus October 23 to October 24 on FHFA data there through October. They're month over month. They had a 0.4% increase in October, U.S. home prices for the month of October. Again, that related to a 4.5% annual range. And again, S&P CoreLogic had a 3.6, so 3.6 versus 4.5 coming in there when you look at CoreLogic versus FHFA. And there you go on the FHFA numbers. All of those charts, graphs, everything that we use here in the hot sheet, including our hot sheet show notes, which we use every single day. So many of you guys use this data to copy and paste into your emails, into your text messages, your conversations that you're having, or even just your marketing materials, emails, all of that. We release these to BAMX members each and every single day inside of BAMX, the hot sheet show notes, as well as all of the charts and downloads. I mean, today alone, we have 14 or 15 charts and downloads, including the next one I'm going to show you here for BAMX members. So there's so much that just dumps into BAMX. It's the most content-rich platform in real estate to help you kind of sift through everything and just use what's relevant to you in your business today. To get into BAMX, use code HOT to get a discount into BAMX. We'll have the link down below. BAMX also comes with a Zudilio platform, which helps you compete with iBuyers, generate 4 offers on every single one of your listings to bring more value to your sellers. And their other tools also help you get more listings. Zudilio, we asked them the other day, we said, hey, you guys have the stats, you have the data of where these cash markets are the richest. Where is the money coming in on these cash offers? What are the top 10 for 2024? And so they broke that down for us. Top 10 housing markets for cash offers in 2024. This went through December 27th, so close enough. Here were the top 10 housing markets for cash offers. You had Vegas at 1, Tucson, Arizona. Shout out to Eric, the broke agent. That's his origination location there, Tucson. He grew up in Tucson. Origination, as if he is a meme alien. Tucson, Arizona, the birthplace of the broke agent. Henderson, Nevada, coming in at 3. Orlando, Florida was just there for 5 days. Orlando's got a particular buzz this time of year. One of those buzzes that maybe I would want to avoid in the week between Christmas and New Year's if I have my choice going forward. But Orlando, Florida at 4. Los Angeles, number 5. You had Phoenix at 6. San Diego at 7. Fort Lauderdale, Florida at 8. Jacksonville, Florida at 9. And Dallas, Texas at 10. So there's your top 10 housing markets for cash offers. All the data sourced from Zudilio. BAMX members, you guys get a free platform with Zudilio. Take advantage of that. Utilize it. I know so many of you guys are having a ton of success there. As we start the new year here, as we start 2025, let's take a look where we're starting on the 30-year fix. We're starting at 7.07. That's where we ended, 2024, December 31st. Didn't have a read yesterday being the first. We'll get a read today. We'll see where that ends up. But with the 10-year being up over 4.5, don't expect much movement there. This was the year here, the past year on the 30-year fix. So, we're below the peak that we saw, peak level in that April timeframe when we also saw the 10-year get up over 4.5. We were at 7.5. So the spread's gotten a little better, still in the low 7s, nowhere close to obviously where we want to be, which is, September levels, low 6s. It's where some of the analysts have us coming in. So we'll see, if that is the case as we get into, some more weeks, some more data, some more economic data. We'll see how the markets react here as we move into this first month of 2025. It's an honor to kick it off with all of you guys here on this hot sheet show as we kick in 2025, as we kick off the year together. We'll be back obviously Monday, 9:30 on the East, 6:30 on the West. Monday through Thursday show here again for 2025 on the hot sheet. Every day that the markets are open, almost every single day, 99% chance we are going to be with you, obviously live here on the BAM YouTube channel. Hit subscribe down below. Hit that notification bell if you haven't done so. We've got a lot of content coming your way in 2025. If you want to catch the replays, if you ever missed the live show, you want to catch the replays, they're always available still here on YouTube. Doesn't go away, even though it's a live show. It'll be available later in the day. It's also available on Spotify and Apple. So if you listen to the Hot Sheet, you love the Hot Sheet, love for you to consider leaving a review on the Hot Sheet channel over on Spotify and or Apple. Mean a lot to us over here at BAM. All right, there you go. There's your first Hot Sheet for 25. We'll see you back here Monday. And until then, of course, toodaloo.